Welcome to the Market Huddle with Patrick the Content Machine Ceresna and Kevin the Macro Tourist Muir. So grab a drink, get comfortable, and get ready for a deep dive into the markets. Take it away, guys.
It's October 11th, 2019. I'm Patrick Ceresna.
And I'm Kevin Muir. Thanks for tuning in this week. Tony Greer of TG Macro fame joins us for a deep dive into the dark art of macro technical analysis. For our WTF segment, we say no to IPOs.
And in this week's trading history, we go back to the TARP bailout of 2008, and then we get into the top 5 things to watch next week. So let's get started here. Lena, why don't you join us? Who's the sponsor this week for the beer?
This week, our sponsor is Don't Poke the Bear Ontario Craft Cider.
Cider. It's not a beer. It's a cider. This is the first cider we've had so far, right?
Yeah, but the name just is so fitting, so we had to go with it.
And this bear is like badass. It's got an eye patch.
Don't poke the bear.
Yeah, don't poke the bear. That's what happened.
Okay, let's give this a whirl.
Do you guys want me to read the little description?
Yeah.
So the Don't Poke the Bear line of products were founded by 2 VQA wine producers who share a strong commitment to social causes. The cider uses 7 varieties of Ontario-grown apples in its creation. It boasts fresh apple aromas and flavors that lead to a crisp finish. Enjoy chilled with pork chops or turkey wraps. Perfect for our Canadian Thanksgiving.
Yeah.
There
Actually,
you go.
I'm looking at the can. There's something that says, I am a true Canadian bear. I am polite until poked. Sorry. Actually, I kind of like it. I didn't think I was going to like this because you know me with the fruity stuff.
It's like juice.
Like
It's juice.
It's like juice with a kick. I like it.
Yeah.
I'm a fan, actually.
There you go. So listen, before we get to the main show, just very quickly, I wanted to share a quick picture. It's been like 3 weeks, and we forgot to do a shout out to all of our listeners that joined us for the Market Huddle meetup back when we were doing the Toronto Money Show. It was so great to meet so many of those people, and Lena got out to finally join us for one of our Huddle meetups. Did you have a good time, Lena?
Oh, yeah, I had a great time. It's a bit of a blur. You kept pouring me beers, but I had a great time.
Oh, it was good. We had a great turnout, and a shout out to Luca, who came all the way from Barcelona.
I know.
Can you believe that?
That wins the award.
That wins the award. I mean, he also came out to the Macro Voices live out in Vancouver back a year earlier. So he's clearly a man that travels. But Luca, thank you very much for coming out.
He's probably got some Canadian girlfriends or something on the slide. That's what's going on there. Shh, don't tell his wife. Okay. It was a pleasure, everyone. Thanks for joining us. Let me do my legal stuff so we get on with the show.
Yeah,
Patrick.
let's do that.
Clients and employees of East West Investment Management may hold positions in securities mentioned in this podcast. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. For more information, please visit eastwestfunds.com. Side effects of too much Market Huddle may include permanent liquor blanket and or drunk jacket and a bad case of the drunchies. Do you know what a liquor blanket is?
No, I have no idea. I was about to ask you.
I bet you Lena does. Hop on, Lena.
I actually don't know what it is.
Oh, really?
Yeah, I don't
or
know
a
what
drunk
that is.
jacket.
Or
That's like when it's like you know it's minus 30 out and you've been drinking a little too much and they say, do you need your jacket? It's okay, and you say, no, it's okay. I got my drunk jacket on.
I know exactly how that feels.
Exactly.
There you go.
Most Canadians do. Okay, Patrick. Do you know what time of month it is?
It's time for Tony's macro little window.
That's right. Our favorite technical navigator, the author of the Morning Navigator newsletter, is joining us today, and we're going to talk all things macro. Tony, thanks for being on with us.
Thanks for having me again, man. You guys are the best up north. How's it going?
Good. So it's an exciting time in the markets. We're taping this Friday. We're going to see some action with trade deal. But I think that one of the things that you wanted to talk about is first up is interest rates, and a subject near and dear to my heart because I think you're erring on the bear side.
Well, yeah, at the moment, I think that we're due for a pullback in the bond market. I think yields can trade higher, and I feel like we're getting price confirmation right before our eyes. Those two green dates that I have circled back there, that was those were two events that happened after, as you can see in the month of August, with yields plummeting after the negative yielding rate vortex took over the world for the month of August. There were two bullish bond data points in September that yielded opposite results, right? On September 3rd, we got that big US ISM manufacturing that tips into negative territory. And that was a massively bullish bond, print. And bonds did not advance at all. They made a new low in yield, so they made a new high. Bonds made a new high for the move, and then backed off and settled in positive territory, but back in the range. And then you had another date on September 12th when Mario Draghi came out and went, batshit, dovish. That was a bullish moment for the bond market, and the bond market continued to pull back. In fact, after the Draghi bullish bond announcement, 10-year yields went, flying through 50-day moving average and said to me that like this move is for real. So we kind of surfed it on the way back. And then I anticipated a pullback, and I kind of wrote about it right on the money that we would make a higher low in yields. And that's what we've done. And so now we're coming out with some, economic data that seems to be, relatively plausible in terms of, building a case against a recession coming out. And, like you would expect, an overextended, fully sentiment, gung-ho, bullish, long bond market is going to pull back. So I feel like that's what we're seeing now, and it's going to feed into a whole bunch of other trades. I think the S&P bobbles. I think gold gives us a chance to buy it. And so we'll go over things like that. But you guys take the lead from here. That's my spiel on the 10-year yield.
So,
Tony, you're going to get cut off from Patrick. You're talking bond bearishness.
No. But listen, listen. All right. Don't put words in my mouth here.
I'm a slave to price
action.
Listen,
I'm a price action guy too. What I actually wanted to ask you though is, do you have a bias in terms of the way the yield curve develops from here? Because to me, we didn't see this much of a response on the 2-year relative, which has created a little bit of a steepening. I mean, is this more of a narrative for you on the longer end of the curve that we're going to have like the yields back up and the 2-year holds in, or do you think this like all bonds here, doesn't matter on what duration, are all backing up?
No, Patrick, the curve obviously is critical, right? The curve is obviously critical. And, my harbinger, if I may use that word, the 3-month 10-year spread, which was the first one to sound the alarm into negative territory, right?
Right.
That was the first one that went negative. It dipped negative in March of this year. And then, man, that's a great chart to look at if you can pull it up. And
I have it right here. So you can see
holy smokes. Dude,
that's quite the little breakout there for a technician, isn't it?
As we speak now, this yield is pulling back into positive territory, right?
Yeah.
So now, therefore, rejecting the move into negative territory, that is preaching what? Recession. So this is the first sign that I see that is about to literally knock the knees out from under the media. When we start reporting on this, and we, meaning we, the unconflicted newsletter writers, and then it makes its way around FinTwit, about how this move is leading the way now. You know what I mean? So I'm getting confident that this is a change in direction in interest rates that corresponds with a, large magnitude move across a major boundary in this 3-month 10-year spread, closing it back into positive territory now for the first time since August. This is the kind of thing that changes markets around. It looks like stocks are liking it, and precious metals are backing off a touch, as you would expect, with higher yields. But, the market is definitely speaking to us on this close today.
So, Patrick, this is like bond audio bear porn.
Yeah.
So, Kev, what's your take, though? I mean, is the steepener on now?
Oh, the steepener's on. It's going to be the trade of the decade. The steep
But,
down.
Hey,
but you think that this is it? Like that?
Do I think this is it? I don't know. I definitely think the long end is in a lot of trouble, and I think the short end is going to be pinned by Powell, because I don't see him getting at all hawkish anytime soon. So I think that the long end's acting poorly, and that we're getting.
So you think the bear steepener is going to be the driver, right?
Yeah, I think that the long bond's going to be in trouble. I agree with Tony. It's trading like shit. It's heavy and it looks bad. And I would contend it's even traded badly, even in the face of economic weak numbers in the U.S.
Yeah.
I think it actually has a lot to do with Japan's decision to steepen their yield curve, and that most of the action that we see in the last 2 weeks where bonds have really backed up, I think I think it started with Japan. And I think that we're realizing that central banks are waking up to the idea that a flat yield curve at negative levels is stupid and it hurts your economy. And that it also combine that with the idea that maybe we're going to get some fiscal. It makes all sorts of sense to get out sell the long end of the curve.
So do either of you have an opinion then on does this also make it pretty bearish for the investment grade corporates?
Well,
like
Tony,
just as the correlation, right? Like
over my head.
Okay, well, I'll give it a whirl. I of course the investment grade corporates will go down if bonds go down, but the question is, will spreads tighten or widen during that period? I'm of the opinion that it's probably just it's nothing. Like it's not gonna be some sort of liquidity event that causes a blowout like 2008. It's just that as rates chug higher, that those things are gonna have trouble outperforming. And if anything, though, I think that I could see a situation where treasuries, which I think are vastly overowned, that people go into corporates even a little bit more. So I don't think spreads.
You think so, eh?
Yeah, I don't think spreads get in any real trouble.
I just don't agree with you, but whatever.
I know, but that's what makes a market. Tony, you one of the things that I believe that interest rates affect gold. Because gold at the end of the day is nobody's liability and often trades like a zero coupon bond, in my opinion. I was wondering what you thought with this backup in rates, what that means for gold. And you are famous for your gold calls. Just unbelievable gold calls. So people want to know, inquiring minds want to know what you think about gold going forward.
Well, Kevin, thank you very much. First of all, I have to just say thank you for the compliment. It's too kind of you to say that. I was taught by the best gold traders, and I will say some of the, literally the best gold traders in the world. Some I can mention, some I can't, but Guy Adami is one of them. And the people that I learned from have been pretty consistent with their views and their methodologies, and we've been in touch over the years. So we're just following this really closely. I'm looking for gold basically to pull back to the 100-day moving average at 1450, where I'm going to buy the snot out of it the first time down and sell it again on a bounce. And then I think it's going to be supported even better down at 1350, 1370, which is down at the real breakout level. And I think by the time it grinds down there, timing wise, that this, pullback in the bond market will, have found a level, maybe not be done, maybe not exhausted itself, but have found a level, and then we'll see what happens. Right. But it just sort of makes sense to me with the 30,000 foot up, machinations of the relationship between gold and interest rates that, while we're witnessing what I'm calling and Kevin thinks is definitely, a turning event in the curve, steepening and in yields rising, that we should expect something dramatic to happen, counter in the gold markets, which have been driven by this whole entire move. So, I'm going to be here on the bid to buy gold. And, I think that's the way that you trade it. I think we're in a secular gold breakout still. And I don't think we'll see it back below 1350 for a while to come. I could be crazy. But I'm calling it like I see it. That's where I am. Silver still looks good to me. And that's where we are. Go ahead.
All right. So my question then is this. All right. So we've had a period up until for the last many months that was basically a risk on, risk off. And during that risk off period, bonds and gold were moving very well, and other risk assets were struggling. And so what I now just heard from both of you to one degree or another, actually, I don't know about your opinion on gold there, Kev, but bonds pull back, and subsequently gold retraces. And we're not talking a big reversal trend, but just a backfilling of this prior breakout. Maybe we see 1400, maybe we see 1350, but it backs up. So does that mean risk on assets are game on? Like, if these kind of like gold and bonds are pulling back, are we seeing the stock market going to be the benefactor of all this?
I think it's certain, it could be, but I don't know if the stock market has been necessarily driven by as much by this. I think this scenario is a green light go for the stock market, and that the stock market is probably being held back by this trade rhetoric at some level, and at some other level by the fact that, some of its biggest constituents have stopped performing. So, there's a whole lot of other factors to me involved in the stock market. You've got the private equity overlay, and you've got so many other overlays, the IPO story overlay and all of this that can affect the stock market that may not have as much of an effect on the bond market if I'm seeing it correctly, which may not necessarily be the case.
So, Patrick, I would contend that it might be risk on, but it might be that risk on becomes a different shape than it has in the past, and that you might see things like emerging markets or even Europe. I know you're going to hate that idea, Patrick, but
no, you know what? I mean, that's in our top five, right? Like
but they're going to start outperforming, and so I don't think that you necessarily have to have risk on equals S&P headed higher. There will reach a point where it's all baked in, but so what do you think, Tony? Let's talk currencies a little bit. What do you think of the dollar in here? Like, do you think that was a classic prairie dog that's going to be there was a breakout up above 99.60 there, or tried to break out, and it's now back into the range, and are we headed lower?
Well, I feel like I'm happily still on the outside of the dollar street fight looking in. Don't see the dollar as being a threat to any of the other positions really that I'm trading on my macro risk parameters. The dollar to me is safely and properly gliding higher as the best option amongst the dumpster fire around it. And I think it's just going to stay that way. I'm definitely in the dollar milkshake camp at some level. I understand the shortage of them is definitely going to be a component in, the whole entire complexities of the repo market and the dollar strength behind it. So I'm not giving up. That's like one of my secular views in my matrix is that I'm a dollar bull, and I'm not.
Patrick, I'm gonna preempt you here because I was just looking through Tony's note, and I noticed that he is also not only is he an extremely smart guy when it comes to bonds. But he's also a pretty good guy when it comes to pound trading.
Oh boy! So
what, Tony? What do you think of the pound?
Other than the market gods are shaming me for making a bet with you, Kevin, about this pound trade.
Yeah.
But
so what do you think, Tony? What are you looking at?
This has been the catalyst, right? But yeah.
All I'm looking at is price action as usual, man. The day that it broke back above the 50-day moving average, those huge magnitude moves told me that it was on the move. The thing is trading like a technical wet dream from moving average to moving average, while the whole entire FX complex that I speak to is doom and gloom, doom and gloom, doom and gloom, to the point that I'm in a chat room with a couple of guys like that. And they express their bearishness on every single dip, every time something goes wrong with Boris. And I say, yeah, okay, but it's not making a new low below 120, is it? And then finally, this week we get the extension that you expect when people are short pounds. And so now the beauty is that we are on, we're right on the 200-day moving average, which is going to trigger a whole bunch more buying stops in the pound if we get a close above there. And I feel like that's the low-hanging fruit. And the direction certainly that, traffic will be going and will put the most people in pain. So I think higher for the pound. I still think we retrace toward 130 and then we'll see. But I do expect that this is the explosive move that busted through the 200-day moving average. I wish it was something that was easier to play and, more liquid and that we could bash around a little bit more. But you can get pound exposure.
All right. Well, you know what, Kev? So you still think we're going to hit 129 and you cash in your bet?
Oh yeah, Patrick, you're gonna. Well, I shouldn't say anything.
Yeah.
Come on, I'm trying to goat you into.
Yeah, no. I
Can I buy
understand
Patrick
that.
out?
Sorry, what's that?
If you want, Kev, we'll buy Patrick out or something like that. I mean,
That's right. We should be offering them the ability to early settlement. No.
Dangle
let's
on
see it
80
through.
cents on the dollar.
Yeah. No.
No, because the bragging rights are just too great.
That's right.
It's
Plus,
not.
I want to see how many of these things I win or lose.
Hey, Kev, Kev, can I ask you a question while I've got you here? You mentioned a dirty word in TG Macro headquarters before, and that is, the infinite dunce Jerome Powell at the head of our Federal Reserve down here. And I was wondering what you thought about, this new operation that looks a lot like QE and smells a lot like QE. That's not QE. Can you comment on that, please?
So, first of all, if anybody tells you they truly understand it, they're probably lying, because the reality is there's a lot of moving parts to this, and we've hit this. We changed the environment coming out of the great financial crisis. We changed the way that the monetary system works, and there's no doubt that the Fed used to be in the market all the time, buying and selling T-bills to keep the rate where it was. And then what happened was, once there was plentiful of reserves, they didn't have to do that anymore. They could just basically set it. And then what happened was they made a mistake. And I think what's one of the interesting things is they tried to downplay their mistake and say that it wasn't that big a deal. I think that if you got them in private, they would say they weren't ready for it and it caught them off guard. They weren't expecting it at this point. And I think that they've done the correct thing going forward in terms of fixing the issue, but I'm still nervous about it, Tony. I'm nervous because at the end of the day, they still needed liquidity. There was still a requirement for more liquidity, and I'm also nervous. I go back to that Jim Bianco chart that I love talking about, which shows the Federal Reserve's policy rate versus the rest of the world. The Federal Reserve still has the highest policy rate in the world, and these are when mistakes happen. So I hear lots of excuses of why this doesn't matter. I understand them. I am happy that they're on top of it. I just worry that the next one is also going to catch them off guard, and if they're not ready there with the liquidity that the system needs, then it could be a situation where there is a little bit of a hiccup. So I don't really have anything insightful to say except that it makes me a little nervous. Then I'm also worried about the fact that we needed to do it and that nobody really knows why we needed to do it and why it continues even past the tax settlement date.
Yep.
All right.
So that's kind of my 2 cents. I do believe that what we really need is the U.S. to have a lower rate than the rest of not than the rest of the world, but to not be the highest rate in the world. And that is ultimately, you might not like it. The American central bank might not like being the central bank to the world, but the reality is with the reserve currency, that is the truth of the matter is that they are the reserve currency. And as long as that continues, I worry anytime I see there's a liquidity shortage and a dollar shortage. Now, I will say one thing. I'm kind of happy that the dollar is going down, and that is ultimately one of the things, the kind of guideposts that I will watch. And if you did see a situation where there was a liquidity crunch and the dollar was skyrocketing again, that's what would make me really nervous about kind of risk assets.
Excellent point. Yeah, that's a good point.
Tony, I want to move on though, because the time though when you were last on, we had this big oil spike from that attack in Saudi Arabia, and then a monstrous nosedive all the way back down to multi-month lows. And what the hell's going on in your mind in oil? Is this going to be a short-term low at this technical support? Because Kevin's going to say there's no such thing as a triple bottom. But what's your thinking here?
I think that oil likes the price of $55 is what I think, right? This disruption is wildly interesting, especially since they're getting diminishing returns on bigger disruptions. You know what I mean? Like we got a $2 bounce, a $3 bounce and back after an attack on the biggest production facility in the world. I would have assumed that it could have gotten a lot hairier than that. In fact, I have to say the bad with the good. I bought USO and lost 50 cents on it in that episode, which is something that I would do time and again, because a lot of times oil will surprise you. You'll literally get sticker shock from the price of oil when things like that go on. And I would place that bet over and over again, given my experience with oil, but it didn't work out and I got out. So the market came down and everybody was expecting this implosion through 50, which I'm still absolutely not expecting. I don't think the market is backwardated enough to attract many longs. And I don't think that, hold on a second. Yeah. I don't think that the market is long enough to backwardated enough to attract many longs. And so a spill through 50 might be, kind of anticlimactic. It might be a little bit of a dry heave down there where there's a little bit of support all the way down, and then next thing you know, we're right back at 55 with one headline out of Saudi Arabia. Because right. I get a feeling that that's going to I just have a feeling that that's going to persist. I mean, who the hell knows it? Like Kevin says, if you say you know something about what's going to come out of Saudi Arabia, you're full of beans, like it is a total random headline generator. But as long as the headline...
Basically, this is not the right time to be going heavy into oil.
I think literally... I agree. I don't think it's time to bet on a short trade at all. I'm like, I expect volatility, but I don't expect trending. So I'm not really, I thought that there would have been a bigger upside move after the Abcake incident. And so I don't think that it's going anywhere. I think it's limited to it likes the prices of 55. So that's what I think.
Patrick, I will say one thing. I am a oil bull. I just pulled up the chart, and it terrifies me because you're absolutely correct. It looks like it's trying to make a triple bottom, which, according to my voodoo magic, doesn't exist. So therefore, I have to think that it's going lower. Even though I'm like a huge bull. No, I don't actually think that, Patrick. I'm gonna be long and assuming that it's like a unicorn. It's going to be like a leprechaun. This will be the one triple bottom that works, buddy. This will be it, and then it'll be like we'll paste this one. Look, there's a triple bottom that actually worked.
So yeah, right. So first of all, put it in the Smithsonian.
So in my mind, it was incredibly oversold, and a reaction to like 55, 57 is a very natural retracement of a very oversold condition. But to me, the big tell isn't been given yet. It's about how it behaves when it starts to sell again. And if the buyers are holding the line during little consolidations back down, that could be a major bottom. But I don't want to make a big call. I think we'll see 56, 57 temporarily. It'll probably back off of there, and then it's how the bulls behave during that turn that's going to be the big tell. And so it'll be interesting to watch.
Okay, so Tony, we've talked about a few things. Why don't you leave us with one technically bearish stock that you don't like?
Netflix.
Okay.
All right. Let's take
a look. A lot of it is based on technicals and now a retracement, but I get a feeling that this time around it is, limited to big picture speaking. I'm going to say like 335, 340 on the upside, but I don't think it even gets that high. I think it's in the process.
But you're not shorting yet then? You're basically...
I have a bearish view on my view matrix, and I have not put a physical position on myself yet. But I think that if you get to sell it anywhere near 300, which is now, that you can sell that stock as it continues to underperform FANG, as the competition creeps up. To me, this just looks like every single other company that came out with a brilliant invention had its model ripped off by the heavyweights on the block, namely Disney, Apple, and everybody else that's going to be in the streaming business like Hulu, et cetera. And now they've got competition everywhere you look. So until they, it's going to take them a while to adjust like that, right? But Starbucks didn't perform for, probably 5 years while the S&P rocketed and Ackman stepped in to fix the problem. But I feel like this is another scenario like that where Netflix is going to break down / underperform as the big guys on the block come in and undercut them on price and wider distribution and everything else.
I I love your levels, Tone, because that's exactly what I was thinking. I don't think we're going to see us trade back to 370, 380. So any pop to 320 to 340 on the upside is probably going to be a great place to fade it and put on some fresh new shorts. So let's see whether Netflix does that.
So Tony, thanks for
growth.
joining us. Oh, sorry.
Yes.
You know what? We're running a little short of time, Tony. So what we're going to do here, why don't you give everyone, tell them where they can find you, what your Twitter handle is, what they can sign up for your newsletter. And I highly suggest everyone sign up for the free edition of Tony's newsletter. And if you like it, think about buying it on a more regular basis. But why don't you give everyone your coordinates?
Absolutely, man. www.tgmacro.com is where you can find me, my services, referrals, testimonials. You can sign up for a trial of my newsletter. And hopefully people will feel the same as you, Kev. I can't thank you enough for being so supportive of my work and being such a good client of my firm.
Well, it's great. Thanks for being on, Tony. We really appreciate it. And for those who want more, Tony, make sure you stick around for the after hours. We're getting Tony for the full, usually we only get him for 20 minutes, but we're getting him for the full guest show this time. So stick around in the after hours.
All right. So, Kev, time for This Week in Trading History.
Yeah.
And so I wanted to cover the TARP program. So that's the Troubled Asset Relief Program that the United States government implemented back on October the 3rd of 2008. And it's obviously been labeled the Main Street bailing out Wall Street event, right?
Yeah. It was it was a very emotional affair.
It was. And so let's kind of go through what happened back then. Obviously, we were in the midst of a serious financial crisis. Lehman already happened, right? And all these financial institutions were suffering, and everyone was fishing who's the next Lehman, right? Everyone was looking where is the next pin gonna get pulled. And the U.S. government, obviously by the encouragement of Ben Bernanke and company, and Paulson, all the other ones, came in, and they passed through the TARP program, which was to provide $700 billion of emergency expenditures to buy all sorts of troubled assets to stabilize the economy.
Yeah,
right?
Think about that, $700 billion. And not only that, I believe the assets weren't listed. So the government they were asking for a blank check.
Right. They were asking for a blank check to stabilize the economy. And that doesn't sit well with anybody who, and this is the interesting part, right? Because everyone says, well, this is enriching the bankers and bailing them out. But the thing is that I always kind of look at it and ask the question, what if things really got out of hand and one after another these banks started going Lehman? I mean, that would really have devastated everybody. I mean, I know it sounds like a bailout of Wall Street, and I certainly wasn't a benefactor of it, so I don't want to try to defend it. But sometimes you have to, when these things, this negative feedback loop just takes a life of its own, you have to nip it before the entire system
but Patrick,
fails, right?
The question is, who ended up being saved? Was it the equity holders, and should they have been saved? There's other countries have chosen to do different things that actually zeroed a lot of the equity holders or the bond holders and saved the depositors, because that's in essence what who you really should have been saving.
Right.
So
we
don't want to get
I'll agree with that.
That's right. We don't want to get into too much of a philosophical discussion because it is This Week in Market History. So, but I will take the other side of your trade and say that there would have probably been a better way to do it, and it wasn't just a case of them stabilizing the economy for the good of Main Street. They definitely took advantage of the situation, and it was only a year later they were writing themselves big bonuses again. So I call BS
let's clarify.
that kind of view.
Just to clarify, so it was something like $426 billion that was ultimately invested, and that was invested in three ways. It was either they got equity warrants, into the company, or direct equity, or senior debt securities that were collected or bought by the Treasury. And a part of that is the companies that ultimately, all these different institutions ended up taking some money, but it did limit executive compensation initially. Obviously, like when they paid it back, they could do whatever they wanted, right? It was during the period when they accepted that that money that they were under certain limits.
Okay, so I was wrong. It was 2 years, and they were paying themselves big bonuses again. I was wrong, but yeah.
But you know what? They did. I think the entire TARP program was unwound by 2014, right? I think that sounds about right. And the government got paid back in most part all the money that they used, and so and it did stabilize the situation, but it does bring to question. And you know what? I don't mean to take one side or the other. You know, we're Canadians. It wasn't our skin in the game over there, but it certainly was one very interesting moment in history.
Oh, and do you remember the moment when it failed the first time? I distinctly remember watching the TV and watching it go through, and everyone was saying things like, "Oh, they wouldn't have brought it for a vote if it wasn't gonna pass," and the market was sitting there, and then all of a sudden the nays added up, and there wasn't enough votes, and the market was like, "Holy shit!" and it just went no bid.
Wow.
It was just crazy. I distinctly remember that point where we were watching it, because all the news, the financial news networks were actually putting that screen of the actual, what is it? I guess is it the House of Representatives? I guess
right.
Does it go through there first? But anyways, where they're all voting, and it had like the live ticker, and it was like we were watching it, and then all of a sudden we were like, holy shit, it didn't pass. And then all of a sudden they just started wailing on the spoos, and it was ugly. Really ugly. That was
such an ugly time in the market for sure.
Oh, and it was such an ugly day because it was in an e-liquid session, like in the afternoon, because this didn't have, it was, the vote was at 2:00 or something, and it just went no bid. And then I think Paulson was really worried that it was going to get, it was going to turn into something really ugly. And there's that famous picture with him down on his knees begging Pelosi to pass it.
Wow.
And, yeah, there was just, and anyways, it was unprecedented times, and it was one of those history-making moments that people will remember for the rest of their lives.
It will. There'll be big stories about that even 100 years from now, for sure.
Completely agree.
Anyway, so let's move on, and Kev, a little more cheery. The WTF clip of the week. Why don't you set us up?
Well, this one's actually, you sent me the initial clip because you felt like Jim Cramer had just walked into something that just was begging for WTF.
He always, doesn't he not? I think he makes like 1 out of 4 of our WTF clips.
That's right.
He just,
what would happen if Jim Cramer retired? We'd be in big trouble.
We would be out
material.
of WTF clips.
Yeah. It's like, what would happen if Gartman retired? Zero Hedge wouldn't have anyone to make fun of as much, or at least they'd have less guys.
Yeah, exactly.
Anyways, so let's just play it because Kramer says it all, and it was an interesting thing that immediately popped up to my mind when I saw what Kramer had said. Let's play the video.
All right.
But you have to just say no to IPO. That's.
It's hard work keeping in shape, but it's important to me to be the best that I can be and look the best that I can look. That's why I would never, ever take illegal drugs. I've seen some people who smoke marijuana, and they seem to lose pride in their appearance. They lose their motivation to achieve. And let's face it, what goes in your body eventually shows up on the outside.
That's your new thing?
Yeah, just say no to IPO. Just say no to IPO.
Period.
I get angry just thinking about it makes me mad. Little kids doing drugs, it turns my stomach. That stuff hurts. It stops you from living up to your potential. It holds you back.
Because we can't handle, we being the market, handle another IPO.
It hurts the user. It hurts his family. And it hurts his friends. I just want to shake some sense into you kids that are using drugs and thinking about using. So So remember,
Just say no to IPO. Just say no to IPO.
Period.
don't, or else.
Just say no to IPO. Just say no to IPO.
Period.
Okay?
Say no to IPO. Say no to IPO.
So when you heard that, didn't you think say no to drugs?
No.
I couldn't believe you didn't, because that was immediately what came to my head. Guys, like Nancy Reagan sitting on Mr. T's lap saying, say no to drugs. That's all that I could think about. That was hers, right? Okay, so one of the things is, when we were first watching the video, you were laughing and saying, who was that young lady or whatever? And you had no idea.
Oh, come on. I just guessed.
Well, you didn't have no idea. Neither one of us got the name, immediately got the name right. The interesting part of it is it's Brooke Shields. She was a very famous actress from the 80s, and Blue Lagoon, I think that was her movie when... Anyways, we won't go there. But anyways, I thought that was pretty ironic that she was doing a say no to drugs, because I looked her up and I seem to have recalled her going to Studio 54 as like an underage kid. And sure enough, I pulled it up, and she was at the Studio 54 opening as an 11-year-old. And then there's pictures of her like from 11 onward, spending every Friday night there, it looks like. And I'm just going to call bullshit on this this idea that
she totally was getting stoned there.
Yeah. She's probably like, say no to hard drugs because I took too many of them. And like, I don't know. I shouldn't say that. That might be slanderous. Brooke Shields, please don't sue me. But I'm just calling bullshit on this. And there's no way she said no to drugs her whole life.
But that entire scene of Mr. T, that was hilarious.
Mr. T, I pity the fool.
All right, well, good job, Kev. All right. It's time to move on to the top 5 things to watch next week. And, Kev, we have to quickly just go through, obviously, our list last week just to get an update as to what's going on. And we already talked about it with Tony, but we definitely have seen a steepening of the curve since we talked about it last week. But it's interesting because the curve did steepen more so between the 3-month and the 10. The choose 10s steepened, but not like if you notice here, we broke out the June. Sorry, we didn't go back to the levels we were trading back in May and June just yet on 210s. But if you go and look at that one we were looking with Tony, with the 3-month to the 10-year, like we're breaking out above those May-June levels.
Yeah, but it also got way stupider, that 3-month, right? Like it was minus 50, whereas the 2s barely went inverted, and I don't know if they even ever closed inverted, the 210 spread.
It did go for temporarily inverted. Yeah, it did.
The 530 has been continuing to chug higher. You look at that; it's had a good week as well. Not as good as the 210s. Yeah. And we're taping this Friday after there was a little bit of a sell the news event on Trump. So on the China
the
trade
530,
deal,
right? So
so the 530's actually gone down, but. In general, steepener, it's working. I continue to love it. I still think it's going to be I said this before, trade of the decade. I think that eventually it will go to record wides. I stand by that. I guess I've done something wrong. I put both a timeline and a price on my target.
You're a fool.
The good news is that my timeline is so long that I got a decade. Everyone will forgot I said it.
Exactly.
But, I still contend it's going to be a trade that you should do and you should watch. Keep your eyes on different ways to trade that, because I think it's an important part of the market that will continue to offer good opportunities, because in this day and age of overpriced assets in general, you got to find different ways to trade individual securities or individual kind of themes, and this could be one of the ways.
All right, so number 4, short-term market bottom. I was skeptical the moment I found out both you and Cuppy were short at the same time. So just tell me you covered so I can go short again. Did you get squeezed out? Are you flat?
So I don't talk about every single squiggle, but as last time when we were talking, you were actually more bearish than me again, and I definitely go and I kind of eased up into the dip, because I won't be there for the big one. Like by the time we get a big one, I'll probably be long. But I will tell you one thing. I have been shorting the last couple of days big time.
Okay.
I think that this is the
fake
squeeze. No, it's not a fake out. The squeeze into the China trade tariff news, like it's a sell the news event. And Tony didn't want to say it, but I'll say it. I think that you should be fading this rally, and this is giving you the opportunity to sell it. And I think the action at the close here is perfect. We were looking really good, and then Trump came out with some details, and we ended up going down. And I still think that the path of least resistance for the stock market over the next few months is lower, not higher, especially in the U.S. Especially in the U.S.
I think that the risk, right tail risk of a surprise, is still actually somewhat high. But I'm not going to be as you know what? Listen,
this is what I love. This is, you know what? This is the most bearish thing that I've ever heard. I used to laugh about the possibility.
No, but listen,
of a meltdown,
I am actually quite bearish.
I was a fool.
You
used to be like,
no, stop.
Mr.
Okay, just let me have my moment.
Okay,
I am of the opinion that we're late business cycle. There's going to be a bear market. The market is going to go much lower, no different than you believe the steepener is going to go higher. I am not going to change my tune and be labeled a bull, but I believe that the market popping higher with a squeeze, it can still very much happen and wipe everyone that thinks it's an easy short out of their trades and then roll over into next year. I still, while I'm much bigger picture bearish the market, I still think that right tail risk that we pop higher is there, and I'm not ready to close the door on that.
So I think if we got to move into new highs, it'd be a complete prairie dog, and you should be just like, he's going to be chirping away, and you should be hitting it.
I would say the prairie dog on a monthly chart, not on a daily chart. Like, yeah, I think it breaks high.
I think it doesn't even last a week.
Oh my God! All right.
Let's
see.
Okay.
So another leg lower for those energy stocks. Well, listen, we got the bounce in oil. We talked about oil a little bit with Tony there, but we're getting the reaction. Look, it's an oversold state. We're getting. We might even see 59, 60 on the upside of some of these energies, but this is still a very pronounced downtrend, and I'm not ready to already be pounding the table bullish on this. But it's still a very weak chart on it from a price action perspective. What's your thinking?
It looks like shit, and it feels like shit, but I keep buying it. Like,
oh, listen, at some point,
like it's one of the cheap sectors out there.
Oh, it's value for sure.
Yeah,
for sure.
I don't know.
It's just, at some point it's going to be a stupid buying opportunity of a lifetime, but it's just, it might get worse before it gets better, right? The semiconductors.
One second, I will tell you one thing. I've started to look at cheap Canadian names and buying a basket of those, because if there's anything that's hated more than XLE and the U.S. energy names, it's Canadian names. They are just down and out and just dirt cheap. And I think that you could make an argument that with the change of government in Alberta, that there's all sorts of signals that maybe that things might head higher in the kind of next year or two. I think that we are in the process of making a bottom in those names, and I think that they will. Let's put it this way. At one time, we argued about what was going to lead the next bull market, and I said it was going to be housing, and I thought that we would get a housing rally. I think that at some point in the next year, we will be shocked to find that energy is leading the market higher.
I hope so. My wallet would appreciate you being right.
Okay.
So, semiconductors. Look at that breakout candle. You think it's that's a prairie dog there?
I don't know. I guess that's on the news of the trade deal today, right?
Yeah.
You know what? I probably am more bearish than you, so I'm inclined to believe that looks like, I don't know. Is that a flying dodgy or something? Like I'm sure there's some
a doji dodgy,
whatever. Is it a flying something? Like what is that?
It's just a breakout. It's a breakout candle that basically is forming like it has a big shadow, so some people call it a doji candle. Yeah, but listen, the bottom line is that it actually on its own, it looks like actually a very bullish pattern. And you know how it mixes in with the whole market. Obviously, I seriously doubt semiconductors can rally if the whole stock market peaks. So, I mean, the way I would put it is this: if the S&P is breaking to 3,200 on the upside, like I think that right tail risk exists, then semiconductors, the SMH is going to 130. But that's the condition that would be needed for like there's no way semiconductors are going to 130 while the stock market's selling. And so this is going to be very much hinging on your market call on the S&P, whether that happens or not, right?
I guess so, but on the same breath, it's unbelievable that it's doing this well.
I'm
really
shocked.
Is.
I'm shocked, right? Like it's amazing to see it doing that. Anyway, Kev, those inflation numbers. Wow. Okay. I mean, you made the call.
Yeah. So you can't
you made
give
the
me
call.
too much of a
No.
because of this.
Listen, I'm happy to win the bet for the year, and I'll give you flack then. But right now, you did anticipate the numbers being weak, and they came in weak. So,
well, I think
kudos for you admitting that you're going to lose.
Yes, you're right. Good trader knows when to pull the shoot. I really think that the U.S. economy is going to continue to underperform expectations, and both that call and my ISM call were just based upon that same belief. Mm-hmm. And although I am an inflation bull over the long run, I completely think that over the short run.
Long run being 20, 30, 40 years?
No, long run being like next year. I'm just not going to win the bet this year. It'll be next year. We could double it up anytime you want. But anyways, inflation numbers were weak. There's not inflation to be found. Yeah. The one thing I will say that's interesting is even with inflation numbers being weak and even with the U.S. economy still printing all sorts of bad numbers, I see bonds selling off. So obviously what all the bond bulls tell me that it's all based upon inflation and stuff might not be correct.
Right.
There might be more going on. But anyways, that's just... I just got to poke the bond bulls a little bit. Okay, let's go on.
All right. So let's do the top 5 things to watch next week. So starting with number 6.
Number 6, I like it.
Number 7 is how much weight you're going to gain over the Thanksgiving weekend. Are you over under 2 pounds? What's your over under?
I don't think we've mentioned this yet. It's the Canadian Thanksgiving for our American friends, and. Yeah, no, it's going to be ugly, Patrick. There's no doubt about it. It is going to be probably more than 2 pounds. 2 pounds is like a few beers. Like, think about it. It's going to be 5 if you probably really did it properly. Don't you think?
Oh, yeah. Once you get into that pumpkin cheesecake and stuff like that, it gets ugly.
Pumpkin cheesecake? What the hell?
Oh, you've never had? Oh, dude, you're missing out.
Is that what you guys have? Like the pumpkin cheesecake?
Oh, yeah. My daughter makes like the most wicked pumpkin cheesecake. Like, I can freaking eat the whole thing. It's so good.
You know what? Cheesecake is one of those things that when you look at it, how many calories it is completely not worth it. Like, there's some things that are value when you, like, measure them. Like, and cheesecake is one of them. It's like croissant as well. Like, what the hell? Like, I probably said that wrong. All the Americans will get mad at me because they sound how they say it. And they say we sound French and trying to sound. How do they say it?
Croissant.
Croissant. That's it. I got a good croissant. Anyways, because if I say croissant, they say, "Oh, you're sounding so fancy." But anyways, it's another one that they just
fancy Kev. There we go.
Fancy Kev. It is so not worth it on a calorie basis. And what? Not only that, let's face it, it doesn't fill you up. You could eat 6 of them and still be hungry. It's a terrible food. Anyways, let's talk bank earnings.
All right, so now we had 6 things we wanted to talk about, so we made a few, and we made it just 7 right now. But anyway, number 6, bank earnings. And what I wanted to do is I'll just pull up the XLF. But obviously, there's a big wave of the bank earnings, Bank of America, and all of them are coming out. And there's that's been other than the big reaction off of the December low, which saw these financials recover pretty strongly into March. Since then, the financials have just been in a muddle, right? And it's going to be really interesting to see what comes of this earnings cycle here and whether this is going to be a tailwind and is going to push these back to their highs or not. Because JP Morgan for a little bit was breaking out to an all-time new high and gave it all back. right? And so what's your thinking?
It's definitely porpoising. Like, there's no doubt about it. Like, just up, down, up, down, up, down, like a porpoise through the water. I still love the U.S.
Porpoising.
banks. I love them. I really do.
Yeah.
I think that even though
So,
I'm
but
negative
do
on
you
the
think
market,
that? But is this quarter earnings going to reflect your love?
well, sometimes it doesn't even matter what they do on the earnings, and it's one of those times that maybe they'll look forward that even with bad earnings, it won't matter, that it'll look forward in a rally.
Right.
And so I'm not as convinced. Let's put it this way. I don't think this quarter is going to be anything that's going to cause them to go down. That is something I believe, and I contend that you're going to find them just continue to chug higher and continue to make more money. And no, I'm not worried about this quarter earnings. And in fact, I think that the surprise, if I had to pick something, the surprise will be that they outperform and that they do better on the earnings than we expect.
Right. All right. So number 5, Apple. I just wanted to do I can't believe this thing's breaking to all-time new highs. What a run this thing's had.
I think it's the cherry coke loving octogenarian that's buying it all.
You think so, eh? He's juicing
He's juicing the apple. I like that. Juicing the
We have apple cider that we're drinking. Yeah. We're juicing our own apple.
Yeah. I don't know, Patrick. This thing perplexes me. I get it. It's GARP, growth at a reasonable price. But having said that, it's still a big bloody company, and growth gets tougher as you get bigger, and it's mature, and it just kind of feels to me that it's, I don't know, it almost feels like people are hiding in it. I don't know. I don't really understand why it's doing so well.
Just right now, make the call. Prairie dog or no prairie dog on this Apple breakout?
Well, you know me. I love the prairie dog technical.
A noble
formation.
animal.
It's a noble animal. You have to go with it.
So you're fading this.
So, Patrick, I will be honest with you. I have a problem in that I see way too many prairie dogs.
That's the Winnipegger in you, right? Like, it's just like I said.
I'm like the kid,
I see prairie dogs everywhere.
You know the kid in Sixth Sense that he does? Yeah. He sees dead people everywhere. I see prairie dogs everywhere. Yeah. And ultimately, it might or might not. When they work, they feel great, but when they don't work, you get run over as it explodes higher. Now, Lena's telling me, she's texting me while she's listening to this, telling me that the iPhone 11 is causing the rally. But, like, really, is the iPhone 11 some terrific product that's, like, really mind-blowing? I don't buy it. Like, I just don't think that's
You know, if I was my intuition here, whether it prairie dogs or not, I think this is a very poor asymmetric moment to start buying. So, like, I mean, look, maybe it has another $5-10 on the upside, but this is, to me, there's more room for it to give back a bigger loss than the gain that you have from being long it here. I think it's just a poor time to be continuing to press the stock.
So listen, folks, Patrick and I are both negative on the Apple. You should buy it with both fists. It's going to $300. There you go.
Yeah, there you go.
And Lena's probably going to buy it. She's going to be like, those idiots don't know the iPhone 11's awesome. Okay, number 4. Let's talk some US JPY. Now,
yeah, so
put it up properly.
That's why I typed in USD JPY, because you don't like it when I show it like it's properly supposed to be. And let's look at it like the Forex traders do. Okay. But we have the US dollar yen, and it's not the US dollar is actually working well, even though against the pound and the euro it's not, and so it's moving a little bit counter trend. Will it break out? That's a question I'm asking. Nobody is really paying attention to yen. Everyone, to them, this is like a nothing burger. What's your call? Do you think this is
the reason it's such a nothing burger is I believe that the yen is in the tightest range that it's ever been in terms of, like, when you look on a yearly basis over the last 40 years. Like, volatility on the currencies has gone way, way, way down.
Oh yeah. And I mean, that's one of your big calls, isn't it? That currency volatility.
So far, it's wrong. Like, it's not the volatility.
Well, I mean, when you're talking about a 3-year consolidation, it's not going to break out week after week. Like, you have a bigger.
But I could see bigger moves. It doesn't even have to break out. I could just see moves. I'm wrong. Like, volatility in FX is not picking up yet. And so far I'm wrong, but
I'm gonna draw a little pretty triangle on this chart here, but like you can see this wedge it's just tight range from 2015 peak here all the way to present. It's just been a sideways market. Some big move's gonna happen at some point. Do you think it starts here though?
So I think you believe it's going to move in that the yen is going to continue to weaken and it will go down, meaning up on this chart to like 112.5 or something, right?
I think that's a very easy level to test, and that wouldn't even be a breakout on that bigger chart we were just looking at. That's just going to the top end of the range.
If you made me buy or sell it, I would definitely sell it, meaning I would buy yen. I'm on the other side of your trade.
Sold to you, buddy.
Yeah, I know.
All right, we got do we have a bet here? Are you willing to wear tight shorts for this bet?
Oh, that's a big one. That's a big one. Okay, let's do it. I'll take it.
You'll take it.
Yeah.
All right. So what's the bet here?
So 112 is how many handles? It's like, what are we trading? 108.40. So that's like 60 cents. 360 higher. So oh god, that's so far down though. Oh god, 360 higher. Let me just figure it out what it is.
But it's back down to the
104.80. I'm in.
like right.
I'm in. So 104.80 before 112.
Yeah.
Okay, let's write her down.
All right, I'm going to put it in the thing.
104.80 before 112. And somebody is wearing the Market Huddle menswear outfit to the next Huddle meetup. Are we agreed?
What if it's the middle of winter? Then
doesn't matter. I'm from Winnipeg. It's not going to bother me, so I'm good. And you can suck it up. There we go. We got ourselves.
All right, done,
folks.
Done. I'm in.
Okay.
I'm in.
Lord help me. I don't feel as good about this one as my usual bets, but you know what? It's probably because the stakes are so high. Number 3, retail sales.
Number 3, yeah, retail sales are coming out. Are you going to stay with your theme that everything is shit? It's going to be weak?
Yes. I'm not. I do not think the bounce is coming in the U.S. economy yet. I continue to believe that it will underperform. I don't buy this cleanest dirty shirt in the laundry or whatever it is that they all say.
Okay, I think the forecast is that it comes in at 0.3. Are you thinking that this thing like goes 0 or it's just going to go?
No, it's just going to be like 0.2 or 0.1 or something. Like it might be 0.0. It might be 0, but I just at the margin, I continue to believe that the U.S. economy is underperform. But listen, don't mistake that. That doesn't mean I'm bullish bonds. I think we're going to get a situation where U.S. economy is weaker, bonds go down still.
You heard it here first.
Yeah. Number 2.
I'm not going to disagree with that. Anyway, so let's talk Euro Stock 50. And I just thought it was interesting because we always talk the S&P 500, but the Euro Stock is in a really interesting scenario. Let me just find it on my chart here. And hold on, where do I have it here? Anyway, but we're trading right up along its previous high. And I just wanted to ask a simple question. Oh, what happened here? There we go. I wanted to ask the simple question: do we break out to an all-time new high in Europe?
No, that's not all-time new high.
Oh, not all-time. My God, my apologies.
Yeah.
No, the year high. Year high.
There we go. Yeah. Yeah, I'm going to say we do. And I'll tell you why. I was out for lunch with Aiden Garib from Pavilion Global Macro. You know, we've had him on the show a couple times. And I was giving him my argument, my typical fiscal's coming in Europe. It's going to cause everything stocks to explode higher, the euro to explode higher, and bunds to go down. And he said to me, I said, but I'm still waiting for it. And he says, actually, it's already happening in Europe. And he showed me this graph that I thought was very interesting. It was the fiscal change and like basically the stance of fiscal policy in Europe of the various countries. And I was shocked to see that they've actually already started spending, even though it's not in the news. And I think that's going to continue. And I think that we've kind of reached the point of extreme monetary madness. It's finally been seen for what it is, which is stupidity. And that Europe is going to surprise everyone with some more fiscal, and it's going to cause the stock market to outperform.
So would you do the short S&P, long Euro stock trade here as a pairing?
Yes. Without
And so,
a doubt.
so are you prepared to be stopped out like Soros in '87?
Yeah, when he did the Japan S&P. That's me. Yeah, that's funny.
But you know what? This actually looks like a pretty bullish chart. So I actually don't want to take the other side of this trade from you. I think that there's a good chance that this might break out. Maybe being bullish Euro stock is going to be really interesting.
Yeah, so can I tell a little story? Do we have time, Patrick?
Please.
Okay. So it involves you. So Patrick phones me up because he's had what is his name? Harvey what's Harvey's
Harley
last name?
Bassman?
Harley Bassman from the founder of the Move Index. Very smart, wonderful guy, and he's been on his other podcast.
Convexity maven,
that's right.
Harley Bassman.
And you know what? Sign up for it. You can get it for free. Just sign up for it.
He's so smart.
Yeah. And so Patrick phones me up all excited because Harvey's come up with this great trade, and he's just all excited. And by the way, it's when Patrick's cheating on me with another podcast is when they interviewed him. But anyways, he phones me up and he says, "How do I do this? How do I do this?" And I kind of laugh and I go, "I haven't listened to it yet." And Patrick sent me the tape and I listened to it and I say, "Boy, that Harvey's really smart." But the thing is, I've kind of argued that 2-3 years ago, and the fact is that trade has been nothing but a world of pain for me. And what it is this. Harvey's looking at the long dated for.
It's not Harvey, but
is it? What is it?
Harley.
Oh, is it Harley? Oh, I didn't realize that. Sorry, Harley. So I didn't. I honestly
watch me. You have it wrong. No.
Yeah, my grandfather's name was Harvey. That's why I went with it. And not only that, we have the great burger joint. So I just kind of figured that's got to be Harvey. Anyway, so Harley had this trade where he recognized that the long dated forwards of both in Europe and Japan, but mostly Europe because of the negative rates, we're trading at discounts. Usually when you go look at a future, if the interest rates are high, or positive, then what will happen is as you go out on the futures curve, you will see that the subsequent contracts traded higher and higher levels. So let's just do this together here. I'll pull up the E-minis and I'll tell you what the levels are just so you can understand and you can kind of see it. So we closed today. The spot was 29.70. The December contract's trading right over spot at 29.71, basically. The March are 29.72, and the June's they're basically 21.71.5. And the reason is because the dividend yield is equal to the interest rate, so there's almost no carry on that. Now, if we go look at the SX5E, let me just pull this contract up, which is the Euro stocks.
Right.
You'll see that the spot traded at 35.69. Right. The December's 35.56, 35.40 for March, 34.57 for June, all the way down. If you look at the September 21 contract, even though the spot is trading at 35.70, the September 21 contract is trading at 33.28.
Wow.
Which is what, $300 odd bucks. Discount, and that has to do with the fact that negative interest rates. So when I looked at this trade about getting long options, call options on the SX5E, which is the Euro stocks, I looked at the fact that you had this situation where the curve makes it so these things are really, really cheap.
Yeah,
but not only that, you actually have a lot of what's called row risk, which is the risk of interest rates. If you go buy that call option and then nothing changes but interest rates go back up, your call option will actually appreciate. The long story short is that I've loved this trade for 3 years. I actually wrote it up 3 years ago, and it's been nothing but pain. So, Harley, I hope it works for you. I hope your timing's better than mine because mine sucks. But I hear you. I love the trade. It's one of my favorite ideas, but it's just that it's difficult to time.
You know what? See, this is the problem. Once again, you're incredibly smart, but just early. You're just early all the time.
So I met this really smart fellow that manages money, and he said that when he has a good idea, he sets them. Have you ever seen those services where you can email yourself something and it like I use it? It's called Follow Up Then, And usually what I'll do is I'll put it like for a month or a week or even a day later so that it comes back to me. He emails it to himself 2 years later. So he's like, oh, look into buying Euro stocks because I like it here. And then he'll put it literally 2 years from now.
So then he'll put on the trade 2 years later.
Yeah. So I need to take some advice from him. Okay, number
That's
one.
hilarious.
What is the number one?
Oh, so number one, the China trade deal, right? We have to talk about this. And so look, so the headline here was that some sort of a deal will be reached, and the tariffs will be delayed. And it's interesting that it was at least you already said it once, and I'll give you kudos for it. But what we're seeing here is it's kind of buy rumor, sell news. Like the moment that headline came out, the S&P dropped 20 points off its high.
Yeah, there's just no way that they're going to be able to outperform expectations. Like there's just like it's a classic buy the rumor, sell the news, and there's just nothing else to talk about. Like it's sold to you. That's how I feel about it. I might be wrong. Watch it rip 40 or 50 or maybe even $100 in my face. That could very well be, but I just don't buy it. I don't think that anything fundamentally has changed. And meanwhile, we're kind of remember it was 2 days ago we had the bad news and the S&P was down $35 overnight. Pull up the chart. What was that price, Patrick?
On the S&P?
Yeah, like the future, I
got it up here. So you want an hourly chart?
Yeah, like what was it
down here 2850? Which low are you talking?
It was like literally that one there. Like that was the
this
night,
one here.
Right?
It was 2883.
So how many were like
100 points higher.
Yeah. So I don't know. Do you think is it worth? I don't know.
All I know is I'll be ready to go short when you're being stopped out. So just tell me when you're covering.
That's right.
In pain, and
I'll
I'll help you.
You
cover
just journal the position. Just journal the position into
position over to me, and I'll go short when you're chickening out.
Actually, you know what? Here, I'll tell you a great theory, a trade that I had that Patrick I think is a great idea. You know how that when they look at futures accounts or even option accounts that 90% of retail investors lose.
Okay.
So I think we should start a fund, like a brokerage firm, that just takes the other side of everybody's trades.
That's what half the CFD brokers out there do.
No. Oh yeah, I guess you're right. They do, but don't even hedge them. Seriously,
that's what half the CFD trading firms do. This is not rocket science.
Do you honestly think they do that?
And some of the more well-established ones do auto hedging, but the smaller little shady ones, they don't even bother hedging for sure.
You think
they just wait? They wait for their clients to zero.
So does that mean that if you're a smart and start picking them off, they'll cut you off, kind of like when you go to Vegas and count cards?
It's a good question. I'm sure one of our listeners will pine in on this and send us an email. But
because there's got to be opportunities there. Then, if that is the case, if they are not truly hedging it and they are doing that, then you could probably pick them off.
Yeah, you could. You could find some way of doing it for sure.
Anyways, number one, China trade deal. Buy the rumor, sell the news. I think it's just going to be just classic. What do you think,
I'm not
Patrick?
I'm not sold on your little theory. I think that we can still pop higher into next week, but let's see. Right now, I'm not so convinced that it's a short-term top.
Okay, well there you go.
You're more bearish than I am.
The world is back all screwed up. It's
Just please go bullish at some point, Kev, so I can go bearish again.
Yeah. Well, we're not there. Anyways. Okay, let's go on.
All right. I just wanted to share parting words of wisdom. I just thought this was relevant with the TARP situation. So Paul Samuelson, who's a famed Nobel Prize economist, basically said, what we know about the global financial crisis is that we don't know very much.
Yeah. That is correct.
And, it's amazing when you listen to a guy like Jeff Snyder and all these other guys talk about what's going on in the euro dollar markets. It's amazing how few people really have a good grasp at understanding how the entire system works, right? Like, especially just listening to the conversations on the repo markets and things like this, there really isn't a true subject matter expert, do you believe? Like, at least not from the pundits that will come on TV. I'm sure there's in the banking system behind closed doors.
I actually think even in the banking system, there's very few that understand it, and I think it's one of the problems. And one of the issues that everyone kind of in the short-term interest rate trading environment was laughing about was the fact that Simon Potter, who was one of the New York Fed's previous, I think he was the head of trading maybe at the New York Fed, and he had to come back to the most recent Fed meeting, even though he was fired or parted ways with the Fed, because nobody else understood what was going on, and they wanted his advice. So I contend that you're absolutely right that those machinations amongst the short-term trading and how the plumbing actually works is not understood, and not only that, it's often toyed with or monkeyed with way more than people understand. And that the Volcker rule and all these Basel III and all this shit that we've tried to make things better. And in fact, we might have just created a bigger monster that gets, arbitraged or at least abused another way.
Right. So let's move on. But now, listen, quick housekeeping note. I wanted to do a shout out because I'm going out to the Silver and Gold Summit out in San Francisco coming up at the end of the month, on the 27th and 28th. And I just wanted to extend an invitation to all of our listeners that can make it out there to come and join us. I was put onto a panel, Kev, with Marin Katusa moderating, with our good friend Brent Johnson, who, by the way, is still one of my milkshake guy. But he still, when he was on the Huddle, his interview is still one of my favorite. His story from the gold vaults and everything.
Oh yeah,
that was a classic interview that we had there. If our listeners, if you haven't heard the interview with Brent Johnson, you got to go dig that one up from the Market Hub. We'll have to find out what episode that was. But then I got Cal Everett and Grant Williams all on a panel with me, and I'm thinking, holy shit, I gotta come up with something smart to say in a panel.
Were they just looking for a fourth? Like when you need a bridge table, like you need that fourth, and it doesn't matter how badly they play.
That's clearly they can't make the panel work without me there. So
that's right. They needed the fourth, so it's like kind of.
But listen, all of our listeners, if you go to the Silver and Gold Summit site to register for it, if you use the promo code MACRO50, then you get 50% off of the ticket. So, and that's a special for our listeners. So hopefully you can make it out. You can come say hi to me. Brent Johnson will be out there, and Grant Williams. I'm actually I haven't talked to Brent or Grant, but maybe I can try a swing together some sort of a Huddle meetup out there.
Oh, you should.
Anyway, so our listeners, all our listeners,
San Francisco, and you know what you got to do? You got to make sure that you use the Human Feces app there.
Oh my God!
Have you heard about this?
I'm not even going to go there. I'm not going to say anything.
I'm
not getting goaded. I'm not going to say it. I heard of the app. Yes, I have. Because anyone who goes to Zero Hedge website knows the app very well.
Oh, I didn't know Zero Hedge because I don't read that.
Oh, they
part.
cover it.
You know what the problem with Zero Hedge is? They publish anybody. They publish this macro tourist guy, so they can't be that smart.
They can't be that smart.
But anyways, for those who don't know, there is an app to help you navigate the Human Feces in San Francisco.
It's about letting the city know where to identify it, where they can go clean it up.
Is that what it is?
Yeah. Yeah, so when people see it, then they can report it. And
I love San Francisco. It's no, it's true.
Yeah, because that story right there is so.
Yeah,
that's the first thing I think of is I love it. It's gonna be great.
They're gonna tell us about Toronto, but there's human feces in Toronto too, which there is.
Oh,
there is.
So
everywhere.
listen, if you any of you can make it out to San Francisco on October 27th, 28th, I'm going to be out there. Looking forward to meeting all of our listeners, and we'll try to see if we can put together some sort of a little huddle meetup for a drink. And so I'll reach out to all these other speakers there and see what I can put together.
Good thing you're going, Patrick, because I'm now going to be non persona non grata in San Francisco.
All right.
Okay.
So any closing remarks, Kev? It was a great episode, wasn't it?
It was a great episode. Thanks for Tony for coming and sticking around and doing the full duties today. Much appreciated. Big thanks to Lena for all her hard work on a regular basis. Big thanks to you, Patrick. Where can they find you?
You can find me at bigpicturetrading.com and at Patrick Ceresna on Twitter.
And I'm at Kevin Muir on Twitter, and or go subscribe to the macrotourist.com for the occasionally written blog post. I got better. I did promise that I would write more. I have written some more. I will promise. I will commit again.
Actually, your last few have been pretty good, buddy.
Oh, I appreciate that. Thanks, Patrick.
Yeah, and listen, any of our listeners that don't actually read Kevin's stuff, you're missing out. It's a great, entertaining write, and it makes I learn something every time I read your stuff, Kev.
Well, you're be too kind, but most people realize that I get told I am the Playboy of financial newsletter writers. Everybody says they're subscribing for the articles, but I know they're just looking at the pictures. Leave it with
All
that.
right.
Take care.
There you go. We'll leave it at that. Thanks, everyone, for joining us. Stick around for the after hours where we'll have a little more of Tony. All right. What should we open it with? Tony, by the way, are you drinking a beer or are you going dry?
Yeah, I've been waiting for you guys, man.
All right.
Okay,
so here we go.
Start.
We fucked up, didn't we, Kev? We didn't ask. Okay, here we go. All right, so we're in the after hours, and Tony's here joining us for the after hours show. And Tony, it's embarrassing, but we forgot in the initial segment to even talk about beers and what you're drinking. What's on the menu over there?
I'm drinking very, very simple Bud Lights and just keeping it a few and keeping it light this Friday night.
The Bud Lights. All right. Well, Tone, we're drinking this Don't Poke the Bear apple cider. We don't even have a beer. This is embarrassing.
Man, cider. Come on, you guys are tougher than that.
I'm not sure. Patrick fights like I'm not allowed to say that anymore, but he fights like Borat or something. I got to figure out some new thing. No, Zoolander. He fights like Zoolander.
There you go.
Anyway.
Yeah, that's the safe choice, Kevin. That's a very safe choice.
You're right. So that is a good choice. So, Tony, it's actually our Thanksgiving up here.
Oh, happy Thanksgiving, man.
Yeah. So we actually, because in Canada, the winter comes a lot earlier. So we have to do our Thanksgiving earlier because our crops have been out of the field for some time now.
Yeah. No kidding, man. So what do we got?
We
here?
specialize in winter wheat.
So Tony, let's continue talking about the markets here. As we tape this, we're getting some Trump headlines. What do you think happens on just kind of I don't know, let's say a so-so deal? Because let's face it, if you think that we're getting some sort of breakthrough deal, you're smoking the good stuff, I guess, because the reality is we're not getting that. But let's just say they put together some sort of shoestring deal. Does this mark one of the sell the news events?
Oh, man, it's so hard to tell, Kev. You know what I mean? It's difficult for me to pick a direction and, to react to everything that has been literally a ping pong match between 2850 and 3000 in the last couple of days / weeks,
Yeah, no, I hear you. I was kind of worried coming in this morning because I heard that Gartman was short, but I think he
covered in 24 hours.
I think he covered it, so we're good. So if you wanted to take a stab on the short side, I think the coast is clear.
Yeah, that's not my cup of tea. That's not the kind of thing that I hunt. And you know what I mean? Like the S&P on the short side is not my, those aren't the Jaguars that we're looking for.
That's funny. All right.
We'll see.
So,
what else?
So what else are you watching, Tone? Is there anything that comes to mind that you want to bring to everyone's attention?
Yeah, U.S. Steel is rallying into my wheelhouse, where I am happily getting a chance to put some shorts out into this close. They've
So
got
U.S. Steel, the company, right? Like, and or do you think that they're going to disappoint on earnings?
the company, as in, well, put it this way, dude. The stock was a $45 stock at the end of December. It was sort of into the end of the year last year. You know what I mean?
Yeah.
This year it traded as high as $45 in March. Excuse me, I had that wrong. That was the highest, $45 in March of this year. It's been straight
No,
down.
it was in 2018 actually.
Excuse me.
It was 20. It was 24 this March, and it was 48 in 2018 March.
Correct. I had my screen scrunched up, and I'm blind here. March of 2018, correct, is the highs of 45. Now this thing is an $11 stock now, right? So now we're playing a different ball game than I want to short it on the equity on the looks of the chart, right? Now we're playing a game where the stock is down, hovering above single digits, and there are nothing but perplexing, confusing headlines coming out about the stock. And then there's another fundamental overlay on top of it that's even worse. So I'll go through this super, super quickly and not waste anyone's time. The beginning of the story, we'll do the overlay first, is that the price of iron ore has remained sideways to higher, and the price of hot rolled coiled steel is literally falling off of an effing cliff alongside weaker manufacturing in the world, right? So that is crushing steel producers. It's crushing high-cost, highly leveraged steel producers like Big Steel, right? Now that we've got it down here in this precarious situation where it's bouncing off $10, it's been cut in quarters, inside of a year, they've got a situation where they announced an acquisition of a competitor for $700 million after they are trying to cut $200 million in costs from their operation. They're trying to now raise $2.6 billion in financing. Their yields on their credit is spiking through the roof as the stock goes down. And their CEO packs up and leaves, to the point that he takes a huge pension with a payout with him. And they report earnings like out of the blue early a couple of days later, right? So we've obviously got a company that's, scrambling to sort of save face, save optics. It's rallying like wildfire, which I'm literally salivating over, into the 50-day moving average here at 11. My play is that you're going to get a chance to see a huge downfall below $10, right? There are certain funds that won't hold stocks once they go into single digits. Other ones won't hold them once they go below $5. They are stretched on a credit basis. Their bonds are getting annihilated. And I think it's really like, I don't want to be too alarmist, but it's a pre-Lehman-esque type of air in the big steel trading arena right now. So I'm selling into the short covering rally in the close.
Wow. It's, it's definitely, it looks like a very Deutsche Bank kind of chart.
Yeah, it's a real problem. It's way underperformed. If you draw it up against Nucor and Steel ED, Steel Dynamics, and a few of the others, Reliance Steel, it has so dramatically underperformed that it really tells the story of, oh my God, this company is in trouble, right? Like, this is an outlier underperformer versus its peers. And, there's just nobody standing in the way of it right now, which I think is a good scenario. It could bounce off of $10 and blow the other shorts out. But I will be fighting this thing tooth and nail until they prove to me that they can, raise all this money and settle their credit down.
Have you been tracking the other basic material stocks? Like, okay, let's just say even copper stocks, like Southern Copper or something like. Are like these things have all been killed, but they stopped making lower lows. I mean, there was a kind of a retest of low, some breakout candles. Like, do you think that this basic material space as a whole is still going to struggle, or is it just more thematically, specifically U.S. steel that you are very bearish on?
The sort of industrial / metals and mining space to me gets very stock specific, because I feel like we're talking about different stories in gold and silver than we are in base metals. And then we're talking about a different story in aluminum and copper than we are in zinc, for example, which is, bouncing out of the gym, bouncing nicely, and nickel, which is bouncing because of what's going on in Indonesia. So there's really a mixed bag within the metals and mining sector if you're really, really true to what they're doing. And so that's where you got to separate the stocks, like I think it's a good idea. So trade your Freeport against copper, trade basically Alcoa maybe against aluminum, and that's how you make your choices and place your bets accordingly.
Right.
Okay, Tony, I'm going to take it off topic for a bit. I want to know: are you still surfing, buddy? Or is it too cold?
No, I have not been because the waves are too big for me right now. There are like 6 to 8 foot waves right outside the door. Yeah, man. Go check it out. I could send you guys some video from yesterday from some guys I follow on Instagram. I mean, there are waves 3 to 4 feet over their heads. And, it all had to do with a big swell down in the Gulf Coast that makes its way up here. And the wind lined up right with the tides. And we just had unbelievable conditions. That was it, man. I've been going out and watching. My son was in the water on Monday, and I was scared for his life. But he's well equipped to be out there and with some good surfers and helping him out. So everything was cool.
So, Tony, I was in San Diego this summer, and so we went out and did some surfing. The whole family. We loved it. We thought it was terrific. I'm a huge fan. I'm a big windsurfer, so it wasn't like I've never done it. And but I'll tell you one thing: when I was in Hawaii, I don't know if there's just the waves weren't big enough or I'm too fat. It was very difficult to get up, and I found that in San Diego, it popped right out, no problem, and it was tons of fun. And we had a blast. Like we literally would have stayed there the whole couple weeks and just surfed every day.
It's the nice when the conditions lined up, man. It's like skiing. It's like the greatest way to spend a day outside. It doesn't really get any better than that, So I'm with you 100%. I'm just more about any of the sports that keep my toes in the sand when I'm resting, and you're splashing around in salt water and getting a workout at the same time. That's as good as it gets, right?
Yeah. And so how long can you go in, for you, for a non-professional, just a recreational surfer? Do you go up for your session? Will you go 2 hours out there on the water, or is that?
No, I'm dog tired before then, especially if it's rigorous. If I go out on a boogie board with fins on, and a wetsuit or something like that, and waves that are at least 3 or 4 feet tall, so that you're getting fun rides out of it. I'm usually exhausted in 45 minutes, man, and I'm coming out looking for a beer. It's at my age, it's tiring. The water takes a lot out of you. I'm not gonna lie. It's it's rigorous activity. So how much of it, when you feel your heart pounding out of your wetsuit, at my age, I don't really want to have a heart attack out there. Because that is unfortunately common way for guys on this barrier island to go.
Right.
That's
yeah, I'm not making that up.
No, it's funny in Canada. It's basically hockey kills a lot of middle-aged dudes. Seriously,
I believe it's true.
Because they get out there and they remember their good old days of their coach saying you got to skate hard for a shift and then get back on the bench, and then they haven't done it for a while and they go out and they skate hard for a shift and then they die. And it's funny because the other thing that gets them is squash. For some reason, squash is I had a buddy who had a heart attack, and his cardiologist basically says between squash and hockey, it kills half of Bay Street.
Oh my God, I believe it. I mean, hockey is probably on the same order as being in the ocean with waves that are threatening your life, man. Flying around on the ice with checks coming at you and the danger of falling, the whole thing. Yeah, I believe it.
I know when I was surfing, I got to this point where I got tired and I went to pop up on a wave and my body just said, I don't think so. And I was kind of shocked. I was like, what? It's not listening to me. I was like, that's when you get older. I completely understand that you hit this point where your body, it seems to develop a mind of its own, and it just starts complaining and telling you it's not going to do what you think it's going to do.
Yeah.
I don't know if you found this. This is kind of a morbid topic, but I always used to think, how does someone die falling down the stairs? And I used to think when I was a young guy, I was really arrogant. I was like, how do you die falling down the stairs? And I remember there was a fellow that was in his late 40s he used to write for thestreet.com. And one day we got up and there was I used to follow that website closely. And he said, it's with great sadness that we announced the passing of whatever the fellow's name is. I can't remember. And unfortunately, he slipped on the stairs last night and died. And I thought to myself, I was an arrogant young 30-year-old, and I thought to myself, that's ridiculous. He must not have taken care of himself or something. Now, as a late 40s guy, I'm like petrified of the stairs. At night, I'm like,
yeah.
Like, I don't know. It's just funny. Like you can't imagine that as a young person. Then as an older person, you're like, I completely see these scares are more treacherous than I ever imagined.
Yeah, well, you should warn your readers that we're going into an old guy scene right there, because that is the absolute truth. Between that and scenes that I pick when you hear stories about people falling in the shower is the same thing for me. Where when I was young, you'd be like, how the hell does somebody fall in the shower? And then you reach over and you grab a soap with soap in your eye, and the next thing you know, you're like, oh my God, I could have fallen there. Like, Jesus, that was dangerous, and all of a sudden everything changes for you. Like, oh, that's how people hurt themselves when they get old. But it's a little hairy,
Yeah, no, I hear it. And, it's almost as bad as shorting the boond.
Not a sport for me.
The Widowmaker.
The Widowmaker. Oh, that's funny. So what's your plans for this weekend, Tony? What do you got planned?
The Cornell lacrosse team is playing on Long Island against the Maryland Terps on Sunday morning, which will be awesome. And my intern plays for Cornell's lacrosse team, Billy Chabot. He works for me from Ithaca, New York, and helps me out with a lot of things, all kinds of busy work that I do here at TG Macro, and he's awesome. So I'm psyched to get to see him play and for my son to see him play. And then we've got a tournament that we're playing in ourselves, and the rest of that we are just chilling.
That is awesome.
Nice.
Yeah.
That is great. True. Do you know that lacrosse is Canada's official game?
Oh, of course I do, dude. You kidding me? I'm in touch with some. I'm in touch with the perhaps hottest Canadian lacrosse player, in the game right now, Jonathan Donville.
And
I have no idea.
So is he a young high school kid that's going to play college somewhere?
No, he's actually a Cornell lacrosse player that just won I think it was an overtime goal, won the indoor Canadian tournament for his team. And his dad is a gentleman that's in the industry there at Donville, Kent. And so I know them through the Cornell lacrosse alumni sort of family. And Jonathan is a sophomore, I believe, at Cornell this year, and an outstanding player, and he's going to help them be relevant on the national scene. And he's a pretty big hero in the box lacrosse world in Canada right now, as small as that may be.
Well, we've fallen down, Patrick, not knowing who he is, but I'm glad to see the Canadians, doing what every Canadian that with any skill does, goes down to the U.S. and makes more money.
That's true. True.
That's why we're still stuck in Toronto. Right?
That's right.
That's true.
Okay, well, Tony, we'll let you go, buddy. Have a great weekend. Enjoy your lacrosse. Thanks very much for being on. Why don't you tell people where they can find you one last time?
Yeah, man. www.tgmacro.com. That's where everything that you need to know. You can sign up for my newsletter. It's all right there.
Thanks a lot, Tony.
Give Tony a follow. He's a lot of fun on the Twitter sphere.
TG Macro on Twitter. That's right. I'm sorry about that.
Yeah.
No problem.
Well, listen, have a great weekend, Tony.
And
Take
you
care,
guys
bud.
enjoy.
Thanks for being on.
All right, cheers.
Anytime, man. Peace.
Okay, hop on, Lena.
Hello.
Don't poke the bear. I'm actually a fan.
Are you a cider boy now?
I did not think I was gonna like this. I'm actually surprised. I don't know. It's like.
Are we gonna have to look for more sponsors to send us some cider?
This is like trying kale and being pleasantly surprised, which obviously did not happen. But that's what I was expecting, like the kale equivalent. And I don't know. You know what we have to do? We have to have another cider to figure out if it's just this cider that I like or it's actually ciders.
We have to find that out.
Yeah.
Yeah. No. We have it.
I like ciders.
And so, okay, so Lena,
Yeah.
you like ciders. How is this one, and how do you rate this amongst the ciders?
This was delicious. It was kind of like a spiked apple juice.
Yeah.
Yeah.
I would give it an 8.9.
Really?
Yeah, I'm not going to give it quite that high because you're talking like crazy now.
Well, first of all, let's just make sure that I understand
so
that if we were, first of all, we should make it clear We're starting
yeah.
a separate category for cider rating versus beer rating, because I don't think it's fair to say like an 8.9 on a beer scale. It's not. Like if we bring more ciders, then we're going to compare ciders to ciders. This is
good point,
can't be
Patrick. That's some smart thinking, buddy. That's very unusual. I tend to agree with you. So this is what I'm going to do. I really like this. I want to give it an 8.9 too, but I'm worried I don't know what I'm talking about with ciders. I'm going to go slightly less, but there is a chance that I'm not high enough for it. I'm going to give it an 8.5.
8.5. Now, my only problem with this is that I'm not into sweet drinks and juice, and like it tastes
it's not
very
sour
much
enough
like
for
apple
you?
juice.
God.
No, it's I'm into more kind of bitter and sour things. So for me, I find this a little too sweet. I'm gonna just give it a 7.5.
Okay.
But I personally don't think I would give too much higher of a rating to ciders in general,
But
unless
listen,
I find a
has gotta
proper
be-
bitter one.
This has got to be the best logo, this bear. Like Lena says, it's a badass bear. Like I'm with Lena. This is probably the best can that we've ever drank.
Yeah.
Don't you think?
Yeah.
Oh yeah. Cool.
I'm with it. Like this
And
bear.
it's 5.8% alcohol.
Yeah, but this bear is badass, man. Like I completely agree. Like he should be like managing a hedge fund. This bear.
There.
No, really, he is a badass bear.
Badass bear.
I love him.
Don't poke the bear. Don't poke the bear. Oh, wait, now I was just gonna ask you about this picture. So is it you that is doing the measurement and me holding your legs, or is it that you're holding me?
I don't know. I can't remember.
What are they measuring?
Too much. I know. Look at that. Look at
what are they measuring? They're not measuring from like one end to the other. It's like, what are they measuring?
Actually, Lena, that is a great point. It's very much like Patrick and my huddle preparation. What are we doing? Who knows? It's a mystery.
This just seems like a good idea.
Living on the
We
edge.
have to do it, so we're going to do it. Oh, that's awesome. I agree.
So you going away for Thanksgiving, or both of you guys staying in town?
How about you, Lena? You start.
I have to stay in town actually, just because my almost sister-in-law is due this weekend.
Oh wow, exciting!
Yeah, she's ready to pop
Awesome.
any minute now, so we're kind of on standby.
Oh, that's really great. Is it her first one?
Yeah, it's her first.
Oh, that's really great. That's exciting. That's your
awesome.
almost
How about you?
sister-in-law. Oh wait, so it's Luke's
Luke's baby sister.
Oh, I didn't know that.
So it's gonna be
that's great.
Waterworks from Luke, probably.
Oh, is he a crier?
Oh, when it comes to his baby sister, hopefully he won't listen to this.
No, he won't listen. It's okay. You guys tell us.
Oh, come on. He wouldn't
Come
listen
on,
to this.
he cries. I cry. Listen, I cry mostly in movies.
Do you
And I'll-
really?
Oh, I'm a crier. So I will tell you the other weird thing that I have, and like I realize I'm telling this with the world, so I feel a little strange about it, but I'm gonna go with it anyways. I find myself welling up at the Canadian national anthem.
Oh my
And
god!
I don't know why. I honestly don't know why. I
So
should go
certain
talk to
things
someone
you
about
keep
it.
to yourself, Kev.
I don't know.
That's an inside thing.
That's an inside thing.
Well, that's one of the secrets that you never tell anyone. You know, it's like one of those.
Are you supposed to? No, come on. Like I don't know why. I just find that that's the case.
Are you super patriotic?
I did think so, but I just find myself like very emotional when
Is there like a trigger at some point in the song, or as soon as you hear it?
Oh my God! Now you're digging.
Yeah. Patrick's like, whoa, you crossed a boundary, Kev. Let's stop talking about this.
Let's stop talking about it.
Let's
keep our feelings to ourselves.
Let's stuff those feelings back inside. We're not going to talk about
Push it all
this.
down. Push it all down.
Yeah. I don't know why. I can't remember. I think I remember the first time it happened. I went to see Canada's national hockey team play with my
there it
dad.
is. It's the hockey.
Okay.
And Bobby Orr came out too, like Bobby Orr, and it was something like this, and I can't remember, but I found myself.
It wasn't the anthem then.
No,
the
but
anthem
it is
was
the
simply
anthem.
the trigger.
Maybe
It was your presence to Bobby Orr.
It could be, but that is what I find. I don't cry at babies being born, but that's like, it is a joyous thing. I will say I'm happy about it, or I don't cry for other things.
Thank God it's over.
Yeah, but basically, like, national.
But you'll cry for the anthem. Now, there we go. Everyone now understands.
Especially at the Canada Cup. Like, listen, we all. That's an emotional period for a Canadian.
Yeah.
So, Patrick, here I have a question for you. Do you know where you were when Sidney Crosby won that gold, whatever it was? I can't remember which gold it was. Like,
you don't even remember.
When he scored the goal for the gold. Yeah, right? I was in a local bar, drinking beer.
So I was too, but that seems to be a theory. Actually, I was driving home from the cottage, and we pulled over to go watch it, and we were at Moose in Barrie watching it with the kids, because I was like, no, we got to do this. We got to go pull over for this. This is epic kind of stuff that you're going to remember the rest of your life. Probably I'll just remember it for the rest of our life, and they probably won't. But Lena, do you remember?
To get out of the car.
What are we talking about?
Yeah, see, Lena doesn't remember.
Which game are we talking about?
It was the Olympics.
Oh, yeah. I was at a casino watching the game.
This is like what Canadians are like. They know exactly where they were.
Yeah, I was at a casino in
other
Calgary.
People they say, where you were when JFK was shot. You don't ask a Canadian that kind of stuff.
Oh,
if something terrible happened to our prime minister, nobody would know where they were. But if you knew where you were when the goal was scored, I'll tell you that. So, Lena, that's great. So, are you guys having a Thanksgiving with the lady that's ready to pop?
Well, we're supposed to have a Thanksgiving dinner, but everything's kind of, up in the air until...
I think it would be awesome if she went into labor at Thanksgiving.
Well, that's kind of what I was thinking. But
you think it would be exciting.
I might miss out on, pumpkin cheesecake.
That's right. But that would spice it up if she went into labor then.
Yeah, she wants to have the baby.
Oh, yeah,
today,
listen, I don't know much about this, but I do have 3 kids, and I definitely can attest to there's that last month seems to be the, at least with my wife, it was like, just get this thing out of me stage, I call it.
Your kids where
you gave us really good advice last time I talked to you.
Oh, at the bar I did give you good advice.
Did.
Should I share it with the listeners?
Yeah, because I gave that same advice to Luke's sister and her husband.
I will pass it on. So Patrick, Patrick was probably too inebriated to remember, but I will tell you. So when I was with my first child, I was working at RBCDS on the institutional desk, and this guy that was, I don't know how much older he's probably 15 years older than me, but he had a few kids, and he says, and he was a little bit of a partier, and he takes me aside and he says, listen, I'm going to give you 2 pieces of advice for having your kid. I said, okay, I'm going to listen. He says, listen very, very closely and just do these 2 and don't worry about anything anyone else says. This is all that matters. And he says, first of all, and this is most important, get to know the drug man. That's what he called the anesthesiologist. I can't even say it. Too many drinks for me. But anyways, he says, get to know the drug man. You make sure that period when they can get put the
epidural.
What is it called? Epidural in. If you miss that, you're screwed. And then you're going to do it, and it's going to be disaster. So your only real job is to get to know the drug man. You get there, you figure out where he is, and you follow him around. You don't let him go to emergency. You just make sure that you're there and he's there at the proper time so the epidural gets administered. I'm like, that sounds like good advice, actually. That's like, I'm going to put that one away. I'm going to use that. He says the second one, and I know this from personal experience, he says there's going to be a point after a lot of screaming that there's this awkward silence in the room. You're going to think a joke goes well there. It doesn't.
That's funny.
So that's all you need to know. That's the Dad. That's all you got to do. Get to know the drug man, and when there's an awkward silence, a joke does not go well.
There you go.
There you go.
My funniest story was when my youngest son Austin was being born. I was on a flight to Montreal, and I was in studio to record these videos for the Montreal Exchange on options trading. And literally, I'm sitting there in front of the camera, about to start recording, and my wife texts me that her water broke in the middle of IKEA, and she's on the way to hospital. And I had to
What was
It's
she
just
doing
like-
at IKEA? Like ready
Whatever.
to pop?
She was shopping. It was actually
Patrick's
3 weeks
got
early.
like 19 kids, so like the reality is that she just like it was just a regular.
Yeah, it was just a
Wednesday
normal
for her.
day, but it was actually like 3 weeks early, so it was an unexpected early thing, right? And so basically, I'm rushing to get the first flight back. I made it an hour before my son was born, so I was just like,
that's nice.
it
That's
was
a good
close.
story.
But anyway.
Is that your
All
last
right,
one?
but listen, this is where we'll wrap it up because I'm actually running out of space, so a local storage here to get
Okay,
this
fair
recording
enough.
done. So we'll have to wrap up.
Lena, have a great Thanksgiving. Patrick,
Yeah.
you as
You
well.
guys
Happy Thanksgiving, everyone.
Oh, I hope everything works out with
Oh,
your
weigh
sister,
yourself
almost
today.
circle-in-law.
Weigh yourself
Yeah, weigh
today, and then
yourself.
we'll weigh ourselves again next Friday and see who gained the most.
All right, done
Oh,
deal.
that sounds like fun. Not really, but anyways, okay, let's do it. Okay.
All right,
Have
have a great
good
weekend, everyone.
Happy Thanksgiving to all our Canadian listeners.
Happy Thanksgiving. Cheers.
Okay, bye-bye.